Okay, folks, good evening. Most of you are in the States. Middle of the night for some of you in Europe, and pretty good, beautiful day down here in the Gold Coast, and which is Queensland, northern Australia, right on the Pacific Ocean. I've moved over here a few months ago. It's been extraordinary to have such a lovely warm winter. You really wouldn't know it was winter after where we've been in New Zealand for the last 12 years. But anyway, great to hear you and see you here, and you can all hear me well. Marcel, hi. Boyd, yes, great. Okay, so ladies and gentlemen, we're very honoured today to have with us as our special guest John Gallwas, and John's a gentleman that I've known for many years. He's a very interesting person. He's a gentleman, great friend of mine. We break bread and have a meal when I'm in Chicago. Unfortunately, we haven't been able to get him out down under to New Zealand or Australia, but we'd like to do that. And John is the chairman and founder of Striker Securities. He's been very active in the industry, rising from a broker to senior management at several firms. He's a pioneer of the Asian futures market. He served as chairman of the East-West 97 conference in Hong Kong. That was sponsored by the Managed Funds Association, the MFA, and the Futures Industry Association. And he was also the chairman of the board of the Pacific Commodities Exchange and founder of the Commodity Club of San Francisco. He's been a member of 2 futures exchanges and an educator at industry and university level, and there is really nothing about this business that John Gallwas doesn't know. Now, Striker are our supporting brokers in Chicago. Many of you trade through Striker, but those of you that don't be shy. If you're ever in Chicago, make sure you go and say hello to Striker. And if you ever have a chance to meet personally with John Gallwas, you will be in for a real education. In addition to all of those great achievements, of course, John is the father of 8 children. I have 2, he has 8, so multiply my joys and sorrows by 4, and I can't even begin to understand all of that, but he has 6 boys, 2 girls, and 17 grandchildren, so it's certainly doing your bit to keep the family name going, John. 2 of John's sons, William, who some of you will know is are in the industry. William is now runs, he's managing director of Striker Securities, and John's other son, Rick, runs a specialist brokerage called High Ground Trading, and they specialize in special situations, getting very active now down in South America with major clients. So, John, welcome to the Danielcode, and thank you for being our guest today. You were telling me when we were talking earlier a little bit about some observations of your start in the business way back in 1958 when you were starting as a broker at Merrill Lynch, and the Dow was then at 400. So perhaps you could pick up on that. And tell our audience a little bit about the changes you've seen in the industry, and what you think are the main insights you can give our folks going forward. I know I'm going to be coming back to you periodically during the webinar, but ladies and gentlemen, I'd like to introduce you now to Mr. John Gallwas.
Well, thank you for that kind introduction. It is true. I do have 8 children, and I have 17 grandchildren, which does keep me busy at times. I started in this business with a company called Merrill Lynch, Pierce, Fenner, and Bean, which was in 1958 in New York City. At that time, Merrill Lynch was the biggest brokerage firm on the street in terms of offices and salespeople. and had the first 10 floors of 70 Pine Street. Those of you who are familiar with New York, was the tallest building down there. It's now kind of a runt, but it's still a, I think, 60-story building. At any rate, what has changed about the business is, there's a lot of new technology. Yes, we know more about we have more news, sometimes more news than we know what to do with. There's certainly more markets to trade. We did not have we didn't have any of the financial futures markets. We didn't have any of the bond markets, the fixed income securities, or any of those. Basically, it was the softs, and that was it. But the common factor that's been all the way through all these years is that, one, the brokerage firm, even at Merrill Lynch in those days, Merrill Lynch up all the way through the 70s, the brokers were not paid on commission. Many people don't know that. Charlie Merrill, when he came back in the business in 1940, said, well, I'm coming back in. We're going to bring Wall Street to Main Street. We're going to have annual reports. We're going to have a research department. You want to buy a mutual fund, go someplace else. You can do better by following our advice. And that's the way he built the business. And in 40, he started. In 50, he was a powerhouse. So, and it wasn't until the 70s that all changed back. So he believed, and I believe, quite frankly, that the broker has to be neutral. The broker, to provide service to a customer, has to be unbiased. And so none of our brokers at Stryker are allowed to trade their own accounts, so there's no conflict at all. And I think that's one of the problems in our industry, is we do have too much conflict within the servicing end of the business and the customer end. The other part, though, that is really fundamental throughout all of this is the people that make money in this business approach it as if it is a business. You know, most people kind of go by the seat of their pants or how they feel, and they buy a stock or they go in the commodity market, and their emotions take over pretty quick, and the next thing you know, they've lost money, and then they're mad at the broker, or they're mad at the market, or they're mad, But the fact of the matter, they should be mad at themselves. And it's amazing, a good business person, a good businessman, someone that has been very successful in the business, will approach the markets with an emotional basis and not a business basis. You have to do your homework. John, for example, has really done his homework on this Danielcode thing. It's really deep research he's done. And those people that want to be involved with it need to do the same thing, because it isn't totally objective, it's subjective, and you need to understand how it works. So most people that have been successful that I've seen as customers over all of these years have all done the same thing. They do their homework, they approach it like a business, they understand what they're doing, they recognize the risk-reward ratios, they handle their money the right way. And those are the people that are winners. And I compliment John on what he's done, because he has done the work. In the Stryker report, which has just been published, you can see it on John's website, but he says in here, at the Danielcode website, we have over 22,000 charts that I have published for members since 2007. 22,000 charts is a lot, John. So he's done his homework, and it's exciting to hear how his program is unfolding.
Thank you, John. That's very kind of you. Just, pick up on what you're saying about the people who are successful at this stuff and who are not. Of course, over the years, you've dealt with probably, at least tens of thousands of clients, and I'm getting to the stage that I've certainly dealt with many of them. And it's interesting to me that clients come into trading and they fall into three categories, and it's a pyramid, and it's a pyramid that's very fat at the bottom. At the bottom, you've got the people who just want a quick trading system. They just want to make money. They think nothing more about it. They put in very little effort or work, try zero research, and they come and they're gone. As you move up the pyramid, you get to the next level of people who are serious traders. and we'll do some work and we'll do some research and apply some brain power to it. And right at the very top of the pyramid, which is a very, very narrow point, we have the people who are striving to be Gnostics. Most of our members know it's a word I use a lot, and not Gnostic comes from the Latin, of course, and it's a person who has knowledge. And we have a very, very small number of people who really strive for the knowledge. They want to understand why markets do what they do. That, of course, John, has been my obsession for many years, and that's what the fourth seal is about. It's a forecasting tool. It's quite extraordinary, and I don't know, John, if you've had a chance to see much of it, but I think by the end of this webinar, you're going to be quite amazed by it. But I do, I deplore the mass people who are driven by, as you say, news. We have too much news. In fact, I'm always amused by the news because the news simply follows the markets. Markets do what markets do, and the news follows it. And there are tens of thousands of people around the world who are paid to write or talk or comment on markets, and what they're trying to do is fit market price action to something in the news to make sense of it to the common man. And of course, that's just all the wrong way round. It's a massive, massive industry, the commentary industry. It's a form of entertainment, which these days seems to be the driving force of many commercial enterprises. And it's rubbish. And time after time after time, we've seen the Danielcode signals call for a market turn, days, weeks, and with the fourth seal, sometimes months before it happens. And then everyone's scrambling to catch up with why that happened. So it's interesting, but yes, we have too much news. John, you're one of the few people around who's even older than I am, and and you certainly know a lot more about. You've seen a lot more of this industry than I have. This social media, I was saying to you earlier, I think is an absolute bloody curse. I don't, my generation, I've never been on Facebook. We actually have a Facebook account at the Danielcode, but I don't even know how to get into it. In fact, as I was telling you, I don't even own a cell phone. But you're much more with it than I am. You think that all of this is a good thing, but it just needs to be taken a bit slowly. I think that was your comment to me, John.
Yes. When we went from a 30-word-a-minute teletype to a 100-word-a-minute teletype, we thought we'd died and gone to heaven. And when we got electronic boards that put, versus chalkboards, that put, electronically prices on a board, albeit the old clacker boards, we just thought and when we could dial a 4-digit number and actually get a quote on a stock on the New York Stock Exchange, I mean, how could you do any better? Well, the fact is we do better. We're constantly doing better. And we just have to live with that. You got to be with it. You have to understand it. You don't necessarily have to be with it. But I tell you, if you got a bunch of kids, if you aren't on Facebook, you don't know what's going on. I track my kids on Facebook. I track them on Twitter. I don't know how to work it very well, but I know how to get there to see what's going on.
You're a very, very switched-on guy, John.
But there is a point. There is one point, though, that it's important that people understand. Now, someone doesn't have to understand the depth of knowledge that you have. That is a very difficult and time-consuming thing to do. But they need to understand the theory behind it. They need to understand what the mechanics of it. They need to. If you look at an automobile, you need to. If you're going to be, you need to know the fundamentals about what makes it work, and then you can have comfort in your system, in your approach, and how it works. And that's where most don't really follow all the way through. They look for the Holy Grail, but they don't really understand what's behind it or why. So when it does something that doesn't quite add up, they don't know how to deal with it.
Yeah. So true. So true. All right. Let's move on. John, I've got 110 things I wanted to show you and our guest today. My guess, folks, is that I'm not going to get through everything I wanted to tell you today. But you know, markets have been so dynamic and exciting lately. I've got an awful lot to tell you. So let's just start, if we could. John, I've got half a dozen slides I'm going to just run through on this PowerPoint I have up. And then after that, I'm going to show people some charts. And let's see if we can get across a whole lot of information to you. Folks, first thing to remember, please, if you would, is we are having a tutorial in December. It runs from the 3rd to the 6th of December, and it's going to be held at a most beautiful place called Waiheke Island, which you're seeing now. Waiheke Island is a small island in the Hauraki Gulf, which is just to the east of Auckland, New Zealand, and it's about a 40-minute ferry trip across. It's not a commercialized island in the form that many of you have seen. It's often been described as a New Zealand farm in the middle of the ocean. And it's very beautiful, and this is going to be a very important and special tutorial. So do please, if you can, come. I earnestly suggest you do. There is no better way of getting a really deep education in trading than coming to these tutorials that I do. They run for 3 days. On the 3rd, which will be the Tuesday, we have a welcome cocktail party, and then we have the 4th, the 5th, and a half day on the 6th that we I will teach you all about our marvelous GMADS program and the fourth seal, and fractalian trading, and anything else you want to know. And in the middle of that, we'll be having a fishing trip out in the Gulf. A couple of our members, Mary and Fluffy, live over there. Mary has the real estate franchise for Waiheke Island. She spends a lot of her time there, and Veronia actually has a house there and lives there a good part of the year. So they tell me that you just fall over the side of the boat with a snorkel on to pick up the lobsters in the nice warm shallow water, John. So that's pretty exciting. You ought to be thinking about coming down, John. You haven't seen this part of the world, and I can assure you it's worth seeing. But folks, the main point is that the accommodation is pretty limited on Waiheke Island. The biggest hotel there is a 17-room standard motel. We've got the whole of it booked out, but you need to get on. If you're coming, please go into the forum and look at the poster of the tutorial. Mary has put up all the details there, and Sister Sage Glennis has set up a email with Mary that you can email them, ask them for anything you like. And if you're coming all the way down here, you really need to take a tour of New Zealand afterwards and see this most beautiful country, and Sister Sage will help you with that. But do get on, please, and book your accommodation. It's not going to be a very big tutorial. My guess is 20. And if we can't fit you into the motel, there are lots of other accommodation, but it's all spread out a bit, so it'd be better if you got on and made your bookings as soon as possible. Yeah, Rob, how do you run a 1,000-member tutorial? Well, it's going to be small, this one. It's going to be, my guess is 20, maybe a few more, and they're the best. I don't like big tutorials because I just can't get enough contact with people to get this stuff across to them, and it's very important. It's a lifetime opportunity. So do please email me if you're coming. I'll get round to getting the syllabus out. Oh, Bo, hi Bo, he's coming. Yep, great. You'll love it, Bo. I'll get round to getting the syllabus out. It'll be much the same as the Las Vegas syllabus was, but we'll add a lot of new things to it, including some of the stuff I'm going to show you today about how to take the fourth seal right down to daily charts. Pretty exciting stuff. and you won't see it anywhere else in the world. Okay, let's move on. I wanted to, we've been, got a few of you on trials of FracZen at the moment. John, this is a new program we've just released. It's an intraday program that creates buy and sell signals in futures markets, and we've got it, excuse me, organized now so that these signals are sent out automatically. They run on the Trade Navigator servers in Colorado Springs and Denver, and also on the Danielcode servers. And when a signal is created, it sends a text to your cell phone instantly. It's quite extraordinary. And I grabbed a few charts just before the end of day update today, because don't forget these charts change almost every day. So you'll see at the top of this chart it says 26 tick breakout bar. It was running on 26 ticks today, but it has already changed for tomorrow. So for those of you who would rather steal someone else's work and try and create these charts yourself, rather than paying us a modest fee to do it for you, and there's plenty who do that, of course, let me tell you, please, that these range, the secret to this FracZen is it has a built-in, I don't like to use the word algorithm. It's not really an algorithm. It's a program inside it that reads implied volatility intraday, and it's not volatility as you know. It's nothing to do with the VIX. It's my own measure of volatility, and so it changes its settings every day to reflect the current volatility. And anyway, just to give you a quick idea, this was the US dollar, which had a churny sort of a day today. We had that, of course, on a GMAT sell signal for today. Almost every market today was on one of our buy and sell signals. I'll show you some of them. They made a lot of money today if you were trading, and just to show you this, you can see in that, don't worry about the numbers being in brackets, John. They're not losses. It's just the way the Trade Navigator tool works, which was designed for stocks, which they believe goes ever upwards. They're not cognizant of the fact that markets go down, and us future traders love it either way. So you can see there you had a $615 buy-side trade. You got churned around at the top, which is common, as this market made its outside bar. You lost about $400 there, and then $525 down. And it's amazing how these this FracZen keeps you with the important trend. Here's the NASDAQ. We had a sell signal on the NASDAQ today, John, and interestingly, FracZen had already gone onto the sell signal on Wednesday, as you can see from the S there that I've outlined, and we had a nice $1,000 per one contract trade down. This is silver. Silver's been running on our Danielcode buy signal since the low. I'm going to show you the daily chart of that, and I think we've made close to $12,000 per one contract in about 5 days. It's been quite extraordinary. But here's the FracZen, which shows you the how it stayed on its buy signal right up until the 13th. It had a little churn around there. This is intraday stuff, and then it took off again, and we made another $6,500 on that today. I've got a chart, a screenshot up now, asking you to think about some of these things. I'm not going to have time to go through all of this stuff in detail with you, and I am going to start. William, one of our members, put a post up yesterday saying, let's go back and start looking at the Danielcode charts, which John referred to. And I've got four things here I wanted you to think about. And over the next month, I'm going to do individual webinars on each of these subjects, because there's so much stuff in the Danielcode that we haven't forgotten about it. We trade it every day, but I haven't done a webinar for you newer people, and you folks who've been with us a while, it's always wise to refresh your thoughts. The first thing I want you to think about is our TO3 and plus signals. In a moment, I'm going to show you some comments. We ran, those of you who've been with us a long time will know that for about a bit over a year, John, for 13 months, we ran a live trade room where one of my better students took the TO3 and plus signals and traded them live, and we had a chat room where people could log in and watch how these markets were traded, exactly where the entries were, exactly where the stops went, exactly what the risk was, all of which comes from our trade program. We provide that information every day. But those TO3 and plus signals have run at about 7% a month, and I've been publishing those signals for about 4 years. So 7% a month there. They're optimized for defense. It's an extraordinary program. It's one we don't pay nearly enough attention to. And for you people who are new to trading, because it's optimized for defense, it's the one that you should be starting with, and the TO3 signals in particular. You know, it ranks up there with the best in the world. Now, people find it very hard to trade because there are some strict rules about it that you'll find underneath the trade program banner of the Danielcode website, where you have very aggressive stop loss management and you get out of trades quite soon. But I'm going to show you today a little bit about how you can stay in these trades longer. And for those of you who are serious traders, we actually have a transcript available. It's called the Danielcode Trading Book, and it has 12 months of trading the TO3 and plus signals, and the transcripts from all of that. A voluminous document. If you were to go through it really seriously, put all of those trades on the chart and look at what Dave's comments were during the day, it will take you about 400 to 500 hours, but you will get the most wonderful education on our basic program, which is right up there with the best trading systems in the world. John mentioned the members charts. All markets turn at the Danielcode numbers. Underneath the link at the top of the Danielcode website, if you go up to there, you'll see a link that says members charts. Let me see where it is. Trade program, natural articles, videos, PowerPoints, trading reports. And if you go to that link, it's called Chart Archives. Be very patient. The link takes a long time to open because there are over 22,000 charts in there. And they're the Danielcode members charts that I've been publishing for many years now. And what you will find is that markets only turn at the Danielcode numbers. It is practically impossible to find a market that has turned anywhere except at the Danielcode numbers. You can allow, if you want to know what the variance is, you'll train your eye by looking at those charts. They're usually very, very exact, but if you took a 24-day moving average on a daily chart and allowed about 8% of that average, that would be more than enough. So if you know that markets are only going to turn at one of these numbers, and you look at some of our videos, there's 90 or 100 I've posted now, and learn which are the ones of the highest probability, you start off with an enormous advantage. And I don't think people spend enough time looking at the charts. That's what John says. You don't want to look at the charts. I've had people come into the Danielcode and say, oh, don't waste your time looking at the charts, just give us the trades. Well, that's the wrong attitude. Look at the charts. It should be the first place you go to. And in fact, they're so important that this year we've changed our costings to allow you to have a very cheap access to just the charts. I think we've reduced that to about $65 a month. And for that, you can see what we call the real targets, which are the DC support and resistance numbers. And I think that's about the biggest statement that anyone's ever made in trading, John, that all markets turn at the Danielcode numbers and only at the Danielcode numbers. Now, that sounds a bit better than it is because there are a lot of those numbers and we don't know which one it's going to turn to, but we can certainly get to some high probability trades at those numbers, and you'll see my DC blue line trades, which by definition are markets that are at Danielcode numbers, overbought on stochastics, very simple stuff, and have divergence on momentum. They are just absolutely fabulous, as are the TO3. So do spend some time, please, looking at the members' charts. If you're not members, start by subscribing just for the chart. It'll only cost you $65 a month, and you can start to train yourself with one huge advantage, that markets will not turn anywhere else except at the Danielcode numbers. Point 3 here I've got is don't be frightened to use two-day trailing stops. It's one of the interesting things about markets, that the only points of true support and resistance are the Danielcode numbers on the daily charts and daily highs and lows, and markets will not break a two-day trailing stop very often unless they mean it. So you'll see under the our C or continuation signals and GMAG and Gini, we use a 2-bar trailing stop until the fast stochastic gets overbought, oversold, and we then go to a 1-bar trailing stop. Please feel free to use that. It's a very, very worthwhile strategy to stay in these TO3 and plus signals a bit longer. And if you haven't already got it, ask Terry for the Danielcode library, we call it, in which are some special studies, including the Danielcode stochastics, and they're stochastics that were created for me to my design by Trade Navigator, and they have an extraordinary feature about them, that they do not react to inside bars. Inside bars cause almost all of the false reads in stochastics, which are a very old tool and still a wonderful tool, and we use them in a slightly different way. But if you've got the Danielcode stochastics, they're called the DC stochastics, which you can get from Terry at support of the Danielcode, you will find enormous opportunities. The last point here is market correlations. I've talked about this many times. Remember that many of these markets are correlated, and some of them are correlated so highly that you can take a Danielcode signal in one market and execute it in any other market, so long as it is elected. The standouts, of course, are the US equity markets and the German DAX. If you have a signal in one of those, you can execute it in any other of those. So for today, for Thursday, we had sell signals in the DAX, and we had sell signals, excuse me, in the Russell already, and in the NASDAQ. We had a sell signal for the NASDAQ. So you could execute those signals in any of the other correlated markets. That is, you could take a signal that I posted for the NASDAQ and execute it in the S&P if you wished, or the Dow, or the EX. So remember that. Same with gold and silver. They're so highly correlated that a signal in one can be executed in the other. And you'll see why that's important as we move along here. That, John, is going to be the end of our slideshow, which means we can move on now to a couple of those other points I wanted to show you. First of all, folks, here is a part of a post from forum. We have a members forum where people can ask questions and excuse me, post their thoughts, and it's been running for many years, and my guess is that every question you've ever wanted to ask about trading has already been asked and answered. But I want to just show you this post, which is one by Dave, who was running the live trade room for me back in 2010, 2011 when it was running, and show you the 1 year of trade results from the TO3 and plus signals. And in that period of 12 months, we had 88% winners, 12% losers. 46% of the signals were not elected. They have to be elected in the Danielcode lexicon. That is, trade a few points above or below the previous daily high or low. You'll see for the next trade here, the next post rather, here is Dave also talking about the returns, and on this time, this was in December 2010, the trade room closed at 151,700, and that was running on a account that started at $100,000. So, as you say, this gives us an average of 7.29 after 6 months, and the current Sharpe ratio. And that's 7.29% a month. And if you'd like to, that's getting pretty close to 90% a year. If you'd like to see how that was achieved, he was just a very good student of mine. It's all exactly according to the Danielcode, the methodology that I've taught at tutorials, a lot of which is in our videos here, so that's quite extraordinary. And if you'd like to contact Terry and get hold of the Danielcode trade book, you can see the transcripts of the whole of that 12-month period from Dave. Okay, let's move on here. John, I've got so much I want to show you today. This is usually what happens, is I get so much material and so much to get excited about that I don't always have time to get everything across to people. What you're looking at now, perhaps I should start with the fourth seal, John, and I don't know how much of this stuff you've seen. The fourth seal is a construct that took me 20 years to find, and it basically works on our concept that time and price on charts are the same thing on a different axis. That's the hardest point for people to be able to latch onto. But what it means in effect is that when time is at a Danielcode, recognizable Danielcode ratio, which are these ones you see running across the top of this chart, and price is at a recognizable Danielcode ratio, a turn becomes almost inevitable. And I wanted to show you how extraordinary this has been. You'll see that we publish these once or twice a week. When there's something new to publish, we update it. These ones were last updated on Monday, the 12th of this month. And the numbers on them are the Danielcode time ratios, which are quite extraordinary. If you want to learn more about that, you can read the two articles called Masterclass, which I published some years ago, because I try to make this stuff very transparent in the hope that you'll understand it and pick it up, and they're available at the Danielcode website. So these red lines that you see, these are the fourth seal. These are a mathematical construct that combines time and price, and you'll see that we've got different periods of charts here. This one down here you're looking at now, you'll be able to see it in a moment. It's the 6-day chart of the DAX, and 6-day charts are what we use for our timing cycles. And you'll see that last week we had a bunch of the different timing cycles here. There's a DC week, a Danielcode week is 6 trading days. You'll see we had the 62, 89, 44. All of those are valid Danielcode time cycles. And we had the red line, which is the point at which time and price are squared. And we had 2 of them combining there. And then at the bottom, we have comment. We tell you what's been happening and what is likely to happen. And this stuff is quite extraordinary because it forecasts important turning points in markets weeks and sometimes months in advance. And it also has another characteristic. Once markets lock onto these time cycles, the direction and intensity of the trend tends to strengthen. So if you bias your trading towards taking slightly more risk into the existing trend in that 2 or 3 weeks before a turn is due, you will find that you get extraordinary results. A number of our clients have been doing that, and they're reporting doubling their accounts in 90 days. Now, I don't suggest for a moment that that's going to happen to you all the time, but it is a bias in the market that if you see the fourth seal charts, you will be aware of, and you can take advantage of that. Recently we had, let me move on briefly to show you crude oil. This last 59 cycle here on the blue line at 108.87, you'll see in these columns to the left that that was one of the numbers that we were looking for, 108.87, and there it was. It hit it exactly. It was at the fourth seal line. It was at a Danielcode time cycle, and that's where it turned, and that's why we've been getting some price action and volatility in crude. I said that I would show you this extraordinary T-bonds trade. I read an article, a comment recently where Bill Gross from PIMCO was saying that this rundown, this huge rundown in T-bonds, John, he compared it to the Battle of the Somme and said bond traders have just been decimated by it. Well, you didn't have to be, because if you were looking at the Danielcode fourth seal, you'll see that that turn came at the Danielcode red line, which is where time and price is squared. We had 3 time cycles expiring there, and it ran down exactly to the support from the fourth seal, down around 131, and then into a group of supporting time cycles. And that trade, incidentally, for those of you who are longer-term traders, was worth something of the order of $15,000 per one contract. Quite extraordinary. So there's some of the opportunities there, and I wanted to show you some of these things because they're quite marvelous. Here is gold, which I know you're all interested in. You'll see after the little mini crash in gold, which wasn't a crash, it was just a correction, it went straight down onto the Danielcode red line, into the 59 cycle, and it's had support cycles ever since, and you can see the comments there. It tells you exactly how and when that low came, that there are support cycles, and as he says, nothing to add from last week. The trend is up. Any down move should be considered corrective, and that's been the case. So I just wanted to show you those things to let you know they're available with everything at the Danielcode. We don't want to try to talk you into anything. We simply say that there are free trials of all our products available, and the best thing is for you guys to organize your free trials, and then you can go ahead and make up your own mind whether that's suitable for you or not. Here's the crude oil chart, and this is actually running on fourth seal lines and Danielcode signals on a daily chart, and it shows you a little bit how simply you can take these Danielcode signals and extend them for a longer period simply by using the stochastic at the bottom, which is a DC. That's a specially constructed Danielcode stochastic. Again, don't pay any notice to the numbers in with a bracket on them. That's just the way the tool works. The blue one trades are profitable trades. The red trades are losing trades. So from this date up here, in accordance with the fourth seal, we had a daily sell signal, which was elected. And if you look at the state of the stochastic, it's turned, it's heading down, and all the way down here, it's opening up. These are been referred to sometimes as the jaws of life or the jaws of death. But on the simplest way of looking at charts for you guys who haven't done a lot of trading, you should have had a lot of confidence after this trade was elected to hold on to it a bit longer. GMAG guys, of course, got the lot of this. So you held on to this trade, and down it went. And then for this low here, you can see that it came exactly at the fourth seal line. And we had a Danielcode buy signal for the next day, July the 31st. It was all this stuff's posted on our website for you. And away it went. I actually got out of this trade right at this high. There was a fourth seal line on here, which I've taken off. But I've just constructed the figures so the way you'd have traded, waiting for the daily signals to be elected or otherwise. And you can see that as this market came down, we had a point where there were two fourth seal lines on the daily chart. What you've been looking at before is the 6-day, 12-day chart. This is the daily stuff, which I will be teaching at the tutorial at Waiheke in December. And it's quite extraordinary. And from that, of course, we had a buy signal which was posted. Up it went, and we had a churn here that we got short and then long again. Real quick, there's 2, 4, 7.5, 11.5, nearly $12,000 in winning trades, $1,600 in a losing trade. So about $10,500 profit on that trade in the last 20-odd trading days. And that's how good you can get at this stuff. And almost all of this stuff is already available. You don't see behind the screen, so you don't actually see the charts that I'm working on, but these things translate into our TO3 and plus and GMAG buy and sell signals. So I think that's quite extraordinary. I had a few others I wanted to show you very briefly, and then I'm going to go back and we're going to talk to John Gallwas a bit more. And let me see what else I've got to show you here. Here's the dollar index. Let me blow this up so you can see how this stuff works a bit better. I mean, I find this stuff fascinating because I'm obsessed with it, John. But here we had, at this high here, we had a buy signal up there, and then we had the sell signal, today. But at this point here, which was August the 13th, we had a conjunction of these daily fourth and fifth seal lines, and that's really what we're looking for. The individual lines on their own are not as good as when you get what I call a cocked hat. You get a little pattern where you have 2 or 3 of these lines intersecting. And at that point, it was pretty safe to really tighten your stops up. And I got out fairly close to the high of that bar on the buy side, and then waited for the sell signal, which came today, and down we went. But you can see how the market got to that point, recognized it, and stopped as if it was hit by a train, went down, again running off another one of these fourth seal lines, and then retested it and found another fourth or fifth seal line. So because the rest of the world doesn't know about this stuff, they don't actually understand what controls markets, they drove it up further on some news story or Bernanke story or so. I mean, it's all rubbish, but this is what controls markets, what you're looking at now. But once it got up there, it was like an oops, sorry moment, and it had to revert because the Danielcode rules these things. Let's move on and show you another example. Here's gold, which we've had on buy signals pretty well all the way up here, and the sell, we got that as well. Now here's the interesting alternative view. Here was that same thing where we got a cross on the fourth seal, and that is resistance. These things are support and resistance until they get a matching time cycle. Which are not on these charts. You don't see these on these charts because they run on another rather large computer. But when you get the time also coinciding with these price conjunctions, a turn becomes almost inevitable. But that was enough to give us a correction of a day or so, and then this is a very good time to be trading because remember, support and resistance. To overcome that resistance, the market has to really rev itself up. And that's exactly what it did today. It broke through the resistance, having recognized it, and off it went. GMAG and Fractalian people, of course, knew that that was a buy signal in gold today. Let me take you next to, I just want to keep showing you these examples while we have just a few minutes here. Here's copper, same thing. Danielcode sell there, down it went, $1,400 worth. Got the buy signal, $9.50 up. We got churn there, and this last buy signal's run at 26.50, and you can see how it's just been tracking this Danielcode line all the way up there. Natural gas, here's the same thing. This low, John, natural gas has been in a long downtrend. We had 3 of these 4th and 5th seal targets. Targeting that low, and look where how dramatic that was. The market continued down, accelerated its move down. It hit those 3 points on the 4th and 5th seal, and it turned around with real venom. And we had a buy signal, of course, for that day. In fact, we had a buy signal. All our signals are posted 3 hours after the market closes, so you had plenty of notice and time to prepare to get long this market. That trade was elected on the Thursday. That just got there enough to elect us. It needs to be 2 ticks above the previous bar. Then we get that 1 bar pullback, which made it not look so good, but then off it went. No sell was elected, and that's now worth $1,000 per 1 contract. Let me see what else I had left to show you today. There's the NASDAQ. We had sell signals for that today. You made a lot of money. Here's soybeans. Same thing I showed you before. Here was our turn on the TO3 signals, which come from these charts. It went into this conjunction, this little cocked hat there. That gave us a 1-day correction, and Fractalian and GMAG students knew it was a buy today, made another big bunch of money. This is all getting repetitious, John, but we've had, I'm trying to show our people how worthwhile it is to follow the TO3 and plus signals, and GMAG, of course, is even better. Look at this market here. It runs up here, hits the 4th seal, gets corrected, comes down, finds support down here from the retracement tools which you have. Up it went. There's the cocked hat. It ran right into it, turned around, 1 bar down, another bar down, and look where the high was today. It just couldn't go back above that resistance. Now, that doesn't mean that that market is going to collapse. It may well go up because it's at resistance, and it will require an effort of some sort for it to overcome it. But these are the places that it's really worthwhile trading at these points. Here's silver, John. We've had this market on a buy. We had a TO3 and GMAG buy signal for this market on Thursday, August the 8th, and it's now worth almost $17,000 per 1 contract. And I just wanted to show you before I go back to John here, bonds, same sort of thing. There was the sell signal, $2,000 to the close today, and the Dow. Now look at this lovely sell-off in the Dow here. You could have used, there wasn't a sell signal for the Dow, but there were sell signals for the DAX and the NASDAQ, and you could have executed that in the Dow if you'd wanted to, because of the correlations that I drew your attention to a few minutes ago. And the last one we're going to have time to see, John, is wheat, which not quite as dramatic, but I want to show you exactly the same thing. We had a buy signal for wheat today. In fact, we had the buy signal starting on Tuesday, and you can see how this market has been bouncing off 1, 2, 3 days off the 4th seal as it came down. This is a line that is well below the horizontal, and we don't have a cross bearing. Yachties will know what I'm talking about, which made it less compelling, but nevertheless, you see what happened on Wednesday. We had a buy signal. It was not elected, but the market made a key reversal bar, turned exactly on the 4th seal line, and we had the buy signal extended today, and we had the start of a nice trade moving away there. So, John, there's the 4th seal, or there's the start of which I don't think you've seen much of, but I don't think I've seen anything in my life, and I've been in this business a very long time, that forecast market turns. Well, I haven't seen anything that's accurate until I invented the 4th seal, so I hope you found that quite interesting and exciting, my friend.
It is. You've put a lot of work into this, and there's a lot that is required to understand it, and that's the important part of what I think I have to say about this, is that the people that are on this cast, or people that are really interested in what you're talking about, need to take the to really try and understand it. Your tutorials are obviously a wonderful way to do it. But, you know, any system, the key factor is consistency. You have to be consistent in following each one of these traits, because you never know for sure which one's going to be. If you knew for sure, John, which one it was, you would never have a bad trade, right?
That's right.
So it's important to be consistent. In order to be consistent, you have to understand and have faith in what the system is. And that comes back to doing your homework. So this is all very impressive, and there's a lot here to study and understand. And even if you just use the FractZen system service, the fact is that if you dig into this, you'll understand it. So therefore, when you get the signals, you'll have confidence in them, and you will follow each one. You know, over the years, most people that come in the trades commodities markets, you know, it wasn't until the 70s we wouldn't even let women open an account. Can you believe that?
I actually think that's a very good idea, John. I'm a misogynist.
Early.
But I have two failings. One is I'm a misogynist, which is actually not that I hate women. I love women too much. It's my problem in life. No, you're right. It's ridiculous. And look what a dominant role they're playing in trading now, John. I know you're an expert in the East. And in Japan, I mean, Forex trading is absolutely dominated by women traders, isn't it?
Yeah. And in 1970, a woman it was very difficult to open a commodity account anywhere. The industry just was, you know. So we've come a long ways with these things, but consistency is the key, and that then comes back to understanding the system you're dealing with. A 10-day moving average is better than most people can do by the seat of their pants. But this is obviously considerably more than a 10-day moving average. And I compliment you, particularly on the way that you're changing the ratios here. There's a little bit of you're changing the time scales, which is giving a little different picture, which is quite interesting.
Yeah, that is interesting. I really, one of the simple points I've tried to make today, John, is if you just simply look at this Danielcode stochastic, which is, you know, it was invented by George Lane back in the 40s or so. Was that right? I think in the 40s. You know, and it's a much derided tool, but once you get it so that it's not reacting to inside bars, boy, if you did nothing else except take the TO3 and plus signals and use a trailing stop when the stochastic is taking you the right way. It's, as you say, a very simple tool, but it's very, very effective. And when the stochastic gets overbought or oversold, you tighten it to a one-day stop. And look, you make an awful lot of money. I mean, tens of thousands of dollars. I really don't understand why there is so much fracture in this market. There's 10,000 people selling $50,000 systems, and they all have the same thing in common. They're not logical, and very, very few of them make money consistently, and people just don't hang around long enough to learn. And that's why I'm always saying to people, for goodness sake, get a SIM account and paper trade this stuff for a long period of time, because there's a lot to learn, and you're only going to learn that by doing it for a long period of time, John. What do you think of that?
Absolutely. And it's, you know, emotions are a big part of this. And a lot of people, one, they don't have the time to really follow it as close as many people as they should. But more importantly, don't have the discipline. And so it's the discipline, the consistency. And so the more you paper trade, the more confidence you'll have in what you're trying to do. And so when you get a live trading, of course, it's different. The emotional factors are quite different.
Yeah.
But when you start trading with real money in real time, that becomes best. But you'll have a better understanding. Knowledge is the base of this, as you mentioned earlier. The more you know, the better off you are.
Well, guys, and gals, thank you for your attendance today. One question here for you, John, that you will know more about than me, is this issue of high-frequency trading. The world has got besotted with it, and the media certainly is either promoting it or decrying it. I have to tell you that it's made absolutely no difference to our trading at all now. I don't trade really short-term stuff. The basis of everything I do is starts at 24-day charts, then 12-day charts, then 6-day charts, and down to daily charts. And Frax then is the first offering we've actually made of anything that was of an intraday nature. But it's made no difference at all to our trading, which I think is kind of interesting. But I know you've been involved in a lot of regulatory stuff, and I recall you telling me when I was in Chicago last that you were off to a meeting across the road where you were going to advise the lady Mary, who was at that time the chairman of the SEC. So you've been in this stuff at the highest level. Tell me what you think, please, in regard to these questions we have here. That here we are, fantastic webinar. Mr. Gallwas sounds like a lovely man. He is. And a couple of our clients are looking forward to meeting you personally, John, next time they come over. But it would be, as they say, far better if you jumped on a plane and came to the tutorial here. You know, we've got this beautiful island. It's summer down here, don't forget, John. We're getting very cold where you are. It's start of summer in New Zealand. Beautiful weather, right in the middle of the Pacific Ocean. Clean and green, and it is lovely. It's the most picturesque country you can ever imagine.
I've been on that 15-hour flight from Los Angeles to Sydney.
Yeah, I do it pretty often. It's pretty brutal unless you can go to sleep on planes, which I can't. But look, if you've got one more fifth, I mean, for a man who has, a man who has 8 children, 6 boys, incidentally, folks, and 2 girls, and 17 grandchildren. A long flight is nothing to you. Gird your loins and come on out, and we'll certainly look after you. And our members would love the opportunity of meeting you, and I think you'll find it's a real lifetime experience. I've been to most places in the world, and I can't think of a prettier spot than there. And our tutorials, John, are great fun. We have drinks together after the day's teaching. We have lunch. I take the folks all, take them all out to a dinner together. We have fishing trips and fresh lobster and a lot of fun. The people who come to our tutorial.
I attended the one you did here in Chicago, and it was very interesting.
Ah, yes.
That was well done.
This will be better, my friend. So let me just dangle the bait in front of you. We'd love to see you if you can come down. So tell me about what you think of high-frequency trading and how you've seen it affect your business at Striker, John.
High-frequency trading is actually being dissipated. The natural forces in the marketplace are beginning to take this phenomena away because the profitability is gone. But it created a lot of noise in the marketplace. So many technical systems, it screwed up many technical systems that had, prior to that phenomena, been pretty good. And so technical tools got changed. People started to change to adapt to the new system. But now that's beginning to dissipate. We're seeing some of these high-frequency firms now branching out to other things and going to doing different things. It came and it went. The exchanges, I think, were a bit too ambitious in promoting it. But be that as it may, it is not now the nuisance that it was, and so I think it's helpful now that it's gone. It's not as much as it was before.
Good. Well, glad to hear that. It hasn't affected us at all. You know, we've been running and monitoring these Danielcode trade signals, John, for years and years, as you know, and there's been absolutely no difference at all. They've just been rock solid with no change. Didn't Mr. Gallwas have any electricity in the matrimonial home? John, that's Australian humour for your proclivity to produce children. I guess you don't well, this is an Australian mate of mine, Shift, who's a great guy. He's a long-time client of ours and a good friend of mine personally. That sort of Australian comment for how much he admires your step. How you brought up all those children, I don't know. You're a marvel. You're a marvel. All right, well...
one at a time.
One at a time, yeah. John, I've got two. I don't think I've ever told you this, but I didn't get married till very late in life. I was a confirmed bachelor, and I didn't want children. And this lovely lady I'm married to sort of insisted. So very late in life, we went ahead and were blessed with two children, a son and a daughter. My daughter's going to finish her psychology degree in a few months at Bond University, and my son, you know, I spent 14 years, he's only 16 and he's been accepted for law. He's doing law at Bond University.
Congratulations.
I spent 14 years saying to him, do anything except law because it's a boring bloody business. So what do you think he's done? Law.
I know.
You know that.
They don't fall far from the tree.
No, that's right. That's right. Anyway, John, thank you so much for your attendance today. We're about to run out of time now. We've gone 10 minutes past our scheduled time. Lots of comments here. Thanks, John, for your insights. Loved hearing the historical stuff. Not nearly long enough. Must do it again. Can't you have a 1 hour chat with Mr. Gallwas where he talks and you don't? So everyone's enjoyed you. Marcel's saying thanks how much they've enjoyed it all. John, thank you. Time, our enemy, has beaten us again, but it was a great delight to have you here and to bring, there's my friend Fluffy Veronia. She's the lady who lives part of the year on Waiheke Island, lovely lady. And other members here saying thanks, very interesting. They'd really like to hear more from you, John, and they'd like to hear less from me. So thank you so much.
It's been our pleasure, and tell them to take a look at the Stryker report, the interview that I did with you, as a matter of fact, in July issue. And there's a lot of meat on his responses there. So anyone really interested in what John's got to say should take a look at that report.
Yeah, thank you, John. That's a very good thing that you put out. John, of course, is the editor and organizer of the Stryker report, and he writes to various people that Stryker are associated with and asks some questions and gives them a chance to respond. And you'll see that at the Stryker website, and it's also at the Danielcode website under the big banner that says Stryker report. So, John, thank you so much. I hope I can schedule you, for another day,
anytime,
and we can get some more of that wonderful insights and information you have, because you're really a pioneer and a leading member of this industry, and you've seen and done things that most of us have probably not even heard about. So, thanks for that, John, and for giving up your time this evening. And you're very much appreciated, not only by me, but by my clients as well. So thank you for that, folks, and we'll end the webinar now. I thank you for your attendance, and I'll look forward to the next series of webinars. I probably need 2 or 3 just to cover in detail what we didn't have a chance to do today, but we will do it. So thank you for your attendance. It's Friday afternoon down here, John. It's almost midday on Friday, and so I'm pretty well off the clock now. I'll be going to have a nice lunch by the water at the Broadwater of the Gold Coast, and a few Bloody Marys and some fresh prawns and a bit of lobster. And thank you again for your attendance. I look forward to talking to you next time, John. We're going to not let you get away. We've got to get you back. And do keep at the back of your mind, if you think you can face up to that 15-hour flight, do come. It'll be worthwhile, and we'd love to see you. All right, thank you, folks. That's the end of us for today. I'm going to close the webinar, and I thank you for your attendance.